Well, good morning. Yes, it's me, Kenny Polcari, your host of the party. And today is Wednesday, September 17th, 2025. And you know what that is. So here are the things that you need to know to get your day started. Well, it is Fed Day. And so the countdown begins until 2 p.m. Is it 2 or is it 3 mandates that the Fed has? That's now the question. We'll talk about that in a minute. And here goes Gigi belly aching once again. More BS about NVIDIA. The 10-year is now sitting right on 4%. Mortgage apps exploded higher this morning. And what are we having for dinner tonight? Well, here we go. Keeping with the theme of the Cowboy, it's the rodeo Cowboy caviar. Right out of the Yellowstone cookbook. So it's so great. Now, the bang turned into a bust as buyers decided to just step aside yesterday and wait for what happens today. Because today is the day. It's Fed Day. The news drops at 2 p.m. and then JJ takes the stage at 2:30. I will be on with Liz Clayman on Fox Business to help break it all down after he makes his statement and answers what is expected to be a plethora of questions coming from reporters. In any event, stocks ended the day lower. The Dow lost 125, the SP down 8, the Nasdaq lost 15, the Russell gave back 15. The Transports added those 72. Remember, they were weaker on Monday. The equal weight S&P lost another 19 points, while the Mag 7 continued to push higher, up 175 points. But that might change today for the Mag 7. More belly aching out of China concerning one of NVIDIA chips that Gigi no longer wants Chinese companies to buy, use, and in fact, he has asked, he's actually told them really, to cancel any outstanding orders for the chip. This as they test China, as they test their own first domestically produced advanced lithography machine for 7 nanometer chips. Now this morning, NVIDIA is down 1%, AMSL is down 0.6, and Taiwan Semi is down 0.4. 7 nanometer chips refers to a semiconductor built using 7 nanometer manufacturing processes. A 7 nanometer chip means the smallest structures on the chip are 7 nanometers wide, with just a few dozen atoms across the chip. Now compare that to earlier generations, the 28, the 14, the 10, etc. Each shrinks the transistors, and that means they can be packed more densely. Why it matters? Because more transistors per chip equals more computing power in the same space, lower power consumption, and that's important for mobile devices, laptops, data centers, and its faster switching spreads better performance for AI. Think gaming, high-end servers, right? To be clear, Taiwan Semi is preparing to produce a 2 nanometer chip later this year, so China's behind the 8 ball. In any event, a quick assessment would suggest at best that the China news is not a real threat, it's more bullshit for NVIDIA, ASML, and Taiwan Semi. So no matter how much the media makes of the issue, don't overthink it. Okay, back to the issue at hand. JJ and the FOMC decision. By now you're aware, and if you're not, you've been living under a rock, that JJ is about to start the rate cutting cycle, and it begins today with a 25 basis point cut and will most likely continue through January for a total of 100 basis points worth of cuts. Now, there is some speculation he's going to cut by 50 today. Petey Navarro, Senior Counsel for Trade and Manufacturing, is calling for a 50 basis point cut today and another 50 in October. I think it's just speculation because we never heard from Nikki T at the Wall Street Journal or from our friends at Goldman Sachs. Now remember, if the Fed was going to change their minds and cut by 50 basis points, they would have leaked that information to both Nikki and Goldman. In fact, this morning in the Wall Street Journal, Nikki T basically confirms the 25 basis point cut in his front page article titled, "What to Watch at the Strangest Fed Meeting in Years." Now, it's strange because all the drama, right, around it. Pressure from Trump to slash and burn rates. The loss of Fed Governor Adriana Kugler only be replaced by Stevie Mirren, who is now suggesting that the Fed has actually 3 mandates and not 2. And, of course, there's always the drama over Lisa Cook and her mortgages. Look, let's discuss the mandates, because traditionally we talk about the Fed having a dual mandate, maximum employment and stable prices. That's it, 2 mandates. Stevie is under the impression that there's a 3rd mandate, moderating long-term interest rates, ensuring that the long-term borrowing costs don't become excessive or volatile. Now, the 3rd point has always been a goal, but it has been treated as a consequence of the first 2, not as its own mandate. Stevie's position would almost force, the Fed to become more aggressive in bond market interventions, shifting how investors then expect the Fed to act in the future versus how they act now. In the end, critics are worried that this actually reduces the Fed's independence, and it probably does, making it actually more political, something that we know is no. Now, keep in mind, Mirren is only in that seat until January. His appointment is temporary. Unless, of course, Trump decides to make him JJ's replacement. And then the story really changes. But let's not go there yet, because that doesn't seem to be the narrative, although it could change. Now, here's the other pushback against 50 basis points. How will the market read it? Will it see the move as a sign of panic from the Fed? If that's the case, you're going to expect the algos to flip the switch and go from buy to sell mode, with buyers stepping aside as wave after wave of sell orders blankets the markets. Now, investors are also going to be looking for the dissenters. In July, there were 2 dissenters. What will there be today, more or less? In the end, it's going to be about the tone of the press conference that sets the tone for investors and the markets. Look, if he isn't dovish enough, markets are not going to like it. They're going to back off a little bit. If he's too dovish, then markets are going to assume he's panicking. They'll back off harder. And if he's hawkish, which is a 0% chance, but you have to put it out there, the algos will hit the eject button before he even finishes his sentence. In the end, he needs to be just right. Cut by 25 basis points, indicate that more methodical cuts are coming, and suggest that the economy, while cooling, is not circling the drain. Remember, he'll also need to address the latest dot plot graph, right? What will that suggest about the whole Fed think? Will there be consensus, or will it all be scattered, right? Scattered is not good, just FYI. The dots need to have some kind of a theme, and scattered is not a theme, capiche? Eco data yesterday was strong. Advanced retail sales came in much stronger across all measures, right? Much stronger than the expectation, and that's not helpful for anyone pushing for a 50 basis point cut. You see, the data suggests that the consumer is just fine, not panicking nor suffering. And that's good news for the economy. But it will heighten the debate over how aggressive JJ and the Fed need to be. Apparently, the softening labor market is not hurting the consumer, and that may temper the language that JJ uses at the press conference today. Eco data today, away from the FOMC decision, is all about mortgage apps. They were up a stunning 29.7% week over week. 30-year conforming rates are now at 6.25%. Right? That's down from 7% nearly 2 months ago. So guess who's waking up? Housing starts expected to be down 4.4%. Well, let's see. Building permits up 0.6. Bonds rose a bit. The TLT and TLH up 0.2%. This morning, the 10-year yield is sitting right at 4%. The 30-year is yielding 4.62%. Now, if we break 4% on the 10-year, and I mean decisively, that would be a clear signal that bond investors expect slower growth, slower inflation, and more Fed cuts. Think of the 10-year flirting with the 4% like pasta water just starting to boil. A bubble here, a bubble there, that's not really decisive, right? But a decisive break is when the pot boils over. Water starts rushing out over the side, steam everywhere, no mistakes, no false signals. So in market terms, if yields just sit at 4% and bounce back, that's just noise. If they break 4% and stay below and move lower, that's decisive. Remember, the 10-year tested as low as 375 during the April Liberation Day panic. Here's a hint. That's going to really be the level to watch. Now, oil hasn't moved much. It continues to trade at 63.90, although we did test as high as 64.67 overnight, but we failed. So it remains within the trend line, 62.92 and 64.86. A break above 64.86 would see us push higher, although I don't think it holds, because remember, while demand is strong, there is plenty of supply. There's actually supposed to be an oil glut next year. Gold, it pierced 3,700 yesterday, traded as high as 3,705, another new century mark. But it ended the day lower at 36.89. This morning, gold is down $30 at 36.31, while the dollar index churns at its low. U.S. futures are churning. The Dow is up 15, the S&P's down 3, the Nasdaq's down 20, the Russell's flat. European markets are mixed as well. Donnie and Melania have just landed via helicopter at Windsor Castle and are visiting with the King and Queen before moving on to meet with Prime Minister Starmer. The S&P closed at 66.06 last night, down 8 points. So now We just wait. Remember, it's about the plan. Make sure you have one. It's about time in the markets. It's about discipline and risk management more than trying to just time every market move. So let's review your plan. Call me for a complimentary, no obligation portfolio analysis at 561-931-0190. Okay, so let's move on. In keeping with the theme this week, here's another recipe that's inspired by reminiscence of a stock operator and the recent market action. It's the Rodeo Cowboy Caviar. It is a crowd pleaser, and it is straight out of the Yellowstone cookbook. Thank God for Yellowstone. Now, every cowboy knows that when the rodeo's over and the dust settles, it's time to gather, share, and celebrate. Markets are no different. After the speculation and the drawdowns and the recoveries, there's always a moment when people come together around the table. So, here it is. Now, the Rodeo Cowboy Caviar is just that dish to serve. It's bright, it's bold, and it's built to feed a crowd. It's the Wall Street equivalent of a relief rally, and everybody gets to participate. Now, to make the vinaigrette, you need a third cup of olive oil, quarter cup of red wine vinegar, 2 cloves of garlic, minced, a teaspoon of sugar, half a teaspoon of kosher salt, half a teaspoon of freshly ground black pepper. Now, to make the caviar, you need 1 can of black-eyed peas, drained and rinsed, 1 can of black beans, drained and rinsed, 1 cup of fresh corn kernels, frozen or thawed. You can use no problem either way. 2 large plum tomatoes diced, a half small red onion finely chopped, 1 red bell pepper seeded and diced. You need 1 jalapeno seeded and finely chopped, a half a cup of cilantro chopped, plus a little extra for garnish. You need 2 scallions thinly sliced. Now you want to shake up the market, meaning you got to make the vinaigrette. So in a jar, combine the olive oil, the vinegar, the garlic, the sugar, salt, and pepper, put the lid on and shake it like you're in a trading pit. Fast, hard, and with conviction. Now set it aside. Now you're going to build the base. In a big bowl, you're going to toss together the beans, the peas, the corn, the tomatoes, onion, bell pepper, and jalapeno. That's your diversified portfolio. Every bite brings a different angle. Now let it chill. Cover it and refrigerate it for at least 2 hours, right, or overnight. Just like the market, the flavors need time to kind of consolidate and marinate and blend before they break out. Now you're going to finish it off. Right before you serve it, you're going to stir in the cilantro and the scallions and the vinaigrette. Adjust the seasoning, make it bright and tangy and balanced like a well-timed rebound and a well-positioned portfolio. Serve it up, scoop it with tortilla chips and pass it around. No fancy presentation, just good food for good people. Now to be clear, the Rodeo Cowboy Caviar isn't really caviar. Just like some rallies aren't really about fundamentals. The lesson is the same. Recognize what you're looking at and then act accordingly. Okay, look. It's Wednesday. The sun's coming up. It's a little bit cloudy today, so I'm not sure if that means we're going to get rain or not. I mean, we get a little bit of rain every day here in September in Florida, so today may be no different. But we will wait until 2 p.m. to hear what the Fed has to say. Until tomorrow, take good care.